When the copper decline began over last night, well, it began over the last 5 to 6 months, the intensity began last night, and something that was not really talked so much about was the decline in the Chinese imports. Everybody was talking about the World Bank report, but a Chinese import fell for the 6th month out of the last 9 months. The trade balance came out fine. Export went up. But what matters is the world's biggest buyer of the copper. And basically, the 6 monthly decline out of the last 9 months, this was not seen. Last time was seen was in 2009 crash. And basically, so this means quite a lot. There is no secret that China is in the midst of a slowdown, whether it's a soft landing or it's a hard landing. That's not the big issue. But what we're worried is that when it slows further, if the Chinese yuan weakens further, then China will definitely become an export of deflation. Right. And it will complicate the work of the ECB and even put probably the Fed into a disinflation. And we can kiss the rate hikes goodbye, and yields will continue to head lower.
So that's the crux of the issue. What does it mean for the United States? So you've said it's got some policy implications here. It's possible we're going to push back a Fed rate hike. What does it mean for the stock market as well, Ashraf?
Look, as long as the market continues to believe the story that it is going to raise rates, the bond yields are not going to go up, they're going to go down. The bond market cannot handle higher interest rates. The bond market is saying we are slowing. As this happens, any talk that there is a talk of a potential rate hike, yields are going to come down. And until a certain point, with the deviation with stocks pushing higher and yields going down, there'll be a certain point where the stocks to yield ratio will no longer go up and it will push down. What does this mean for the U.S. economy? Right now, the U.S. economy is, so to speak, the importer of the last resort, like we saw in the mid-2000s. It may hurt the capex for the miners. But it won't be much of a problem as much as it is on the oil capex in the U.S. So it's really a story for China.